Has the Treasury done enough? Do you expect them to do enough to get yields lower?
No, I mean, what have they done? I mean, they told you saw what happened with yields last week. I mean, basically, they went down by 10 bips for a day and then went back to right where they are. I think, first of all, the sizes that you're talking are minuscule. You know, $64 billion a year. I mean, you got to put this into context. When we were doing QE, you're doing $120 billion a month, right? So we're talking about small percentages. They're still issuing like $100 billion of debt and then buying back 2 or 4. These are really small numbers. It's more symbolic than anything. And the thing with the TGA rumors, right? If they're going to use the TGA and draw that down, what does that mean the next time we have a debt ceiling issue? If you have less buffer at that point, the market's going to be more worried, and so you're going to put a bigger premium into the term premium. So
that was clearly a story that was leaked to try and influence financial markets.
Yeah.
I've got no idea how much they draw down the general account. I don't think anyone really knows, maybe 100, 200 billion over what period. I still don't know. And at some point you'd have to refill it and use T-bills to do so at some point. Is it significant to you that that story was even out there in the last 24 hours?
Well, I think it's a lot of like job learning. What can we do to sort of signal to the market that we care about this with actually not really doing anything? And I think this is another example of that. And so I think, I think Druckenmiller is right. I mean, this is all very temporary. The market's going to perceive it temporary. And, 6 months from now, they're going to look back and say this didn't really have an effect unless they really ramp things up, which would be a big change.
Dan, is there a risk in the ramping things up that we go full-on emerging market, we do yield curve control, we crush the dollar, we ignore CPI, run it hot, and try to grow our way out of the deficit?
I mean, incrementally, that's obviously the direction that we've been going with all of the sort of policy, and I think that's what the issue that you're dealing with is the market doesn't really like that, right? And so your bond vigilantes are back for the first time in decades. And on the top of that, you have bond vigilantes, you have AI vigilantes. I mean, it's a tough time with the amount of supply that's coming to market. Yields are going higher, and I think we are just in a higher for longer yield environment. But the good thing, though, I think as we get to the back half of the year, given how much yields have run, I think there's a decent chance that yields will actually come back down, presuming that the Hormuz at some point Strait of Hormuz starts to open up. If you don't get that, then I think it's like anybody's game. We could bust through 5%.
I mean, the inflation data has been cooperating. Things
now
have started to look weaker. You think that that's just temporary then?
I think the biggest swing factor with inflation in the near term is going to be what happens with oil prices, right? And so we don't know what that's going to look like. But if oil prices stay close to $90 for another month or two, I think inflation will start to come back, move higher, and then the Fed's going to have to start hiking rates at some point.